Bart Melek, who's Global Head of Commodity Strategy at Securities, joins in with a quick review on oil prices. Bart, do you think that this is a meaningful reversal which will take us to the other end of the spectrum? So we'll be talking 70 and then beyond once again?
Well, certainly this is a very significant reversal from the bottom. In fact, in North American trading, we were up some 22%. We traded down a little bit in your time zone. However, certainly this is a meaningful reversal. I think not right away, but in terms of Brent, we are, in our opinion, headed into $70 per barrel territory, probably not in the too long future.
Right. But how do you look at the demand-supply scenario for crude playing out versus speculation? Because those are the two factors which actually, fuel the swings in the market.
Well, certainly what we had over the last month and a half was a speculative-driven sell-off. Prior to that, we have had a near record level of long positions across the crude oil market, and we heard some snags. There were quite a bit of worry about the Federal Reserve in the United States getting hawkish. We were concerned about an outright trade war between the United States and China, and we have observed some negative Chinese data, which to a great extent happened to drive global demand, are certainly on the forefront. Now the situation is quite different. One, on the supply side, we have an OPEC commitment plus Russia to cut 1.2 million barrels of supply out of the system starting in January. We're seeing less supply out of Canada, for example. We're going to get 325,000 barrels less a day from that part of the world. At the same time, we are not as worried about global demand. The U.S. Federal Reserve became somewhat more dovish and pragmatic, and we don't see a very aggressive interest rate environment to the upside. At the same time, we're expecting stimulus from China, and there is good news potentially on the trade deal. So a lot of the elements that drove speculators to sell their long positions and perhaps take on some shorts have now reversed, and we are again in a situation where the fundamentals will likely turn into a deficit, and that is driving speculative interest into the long positioning again.
Okay, but very quickly then, in the very near term, what's the target that you're laying for oil?
I think in the very near term, we're probably $2-3 away from a top. We consolidate at this point for a bit. Once we get evidence, particularly in the United States, that inventory numbers are adjusting due to lower shipments from Saudi Arabia. In fact, Saudi Arabia is charging a premium for shipments into North America. Once that high-frequency data starts turning, we're going to see more positive bets on WTI, which should also help Brent and tighten global markets around the world. We think by the second quarter we will be, for Brent, in the $70 average territory, probably trading between 75 and 65 as a way of volatility. So we're not going to have to wait too long for significantly higher prices.
Well, but that may sound a good news for U.S. shell companies, but certainly not a great news for Indian markets, which are heavily dependent on outside crude. Thank you so much for joining us and sharing your opinion with us when it comes to very important commodity, crude oil prices.
Well, it was my pleasure, and thank you very much.
Thank you.